Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
500 rupee and 1000 rupee currency notes presently in use will no longer be legal tender from midnight to night. मैंने सिर्फ देश से 50 दिन मांगे थे, 50 दिन.
It is a case of organized loot and legalized plunder.
Well, almost everyone agrees that the impact is going to be a sharp V.
The one ultimate weapon you have is to leave the job.
नोटबंदी के बाद 3 लाख करोड़ रुपया जो अतिरिक्त जो कभी बैंकिंग सिस्टम में वापस नहीं आता था वो आया है.
The 8th of November was a black day for our economy and indeed for our democracy.
निश्चित ही ये एक वाटरशेड मूवमेंट जिसे कहते हैं.
Hello and welcome to Morning Call. I'm Lata and with me Surabhi and Anuj, and through the day we will be bringing a lot of analysis of what was quite clearly the most unprecedented decision in financial and economic history in the world perhaps, and definitely for India as well. But as far as the markets are concerned, it is history. It got factored in perhaps in a few days, at best in a few weeks, and the markets went on. So as far as the markets are concerned, we don't really have to take cognizance of all that happened. For the moment, let's just look ahead. And we're not getting too much of positive cues from Asia, but the important point is crude, which took the markets down by 100 points, the Nifty by 100 points, and the Sensex by over 300 points yesterday, has kind of cooled off from that 64 level mark. And that could be a big breather for the bulls. Well, for the bears, the other big abetment is going to be that with around 64, you're still going to have interest rate sensitives, banks, NBFCs, airline companies as well, continuing to reel a bit because it's still very close to 64. Pharma companies is also going to be a big help for the bears because the Lupin impact is not going away in a day, even if the results from Cipla and Taro were positive. So that's what the bears get. But the bulls are going to get an important point in terms of help from the FI buying, even after a day which saw massive delivery-based selling in stocks like Lupin and even surprisingly in Reliance. You did see a net FII buying. So perhaps the bulls are going to look at it as one bad day and re-emerge, or maybe 1.5 bad days. I'll leave that to Anuj's judgment.
Oh, absolutely. Good morning, Lata. That has been the pattern, hasn't it? And that's what Anuj has been always highlighting, that it's been 2-3%, and we call that a correction in this market. But what a phenomenal run, 21% since the deal. About it, that 3% decline, and then the bounce happens. Or could it be even shallower this time?
Oh, yes. Morning, Surabhi. Morning, Lata. Before that, I remember 1 year back we were discussing this. That the demonetization could lead to start of a mother of all bull market, and what a year it's been for the market. You could have your opinion, but you can't have your facts, right? The facts are facts, and the fact is that we have seen a huge rally, and in most of the spaces where you thought demon is going to hurt have been the ones where we have the highest rally, like real estate and NBFCs. But let's leave that aside. I think the market is going through that periodic process of cleaning out weak hands. It happens. I think yesterday was maybe start of that. Maybe some more is left, I think. The Nifty's 20-day moving average is 10,250. That should provide the decent floor for the market. All through this bull market, the best zone to buy has been this 20 to 50-day moving average. The 20 is around 10,250, 50 is around 10,100. Rarely has the market broken both these moving averages in this bull market. So if the market gives you that charity, and if it dips say below 10,100, 250, I think that would be the best buying opportunity. But it's not necessary that the market goes there. So you'll have to start buying, on every dip, and then you make money. Actually, I agree with Lata that there's a good possibility that in the second half today, you see a bit of a bounce back, because yesterday's weekday, today at higher levels, maybe there's some selling in the first half, but by noon, my sense is that should get absorbed, and in second half, there should be some buying. FIs continue to buy in cash market, but there's a lot of selling in F&O, which actually is a good sign because that means that the market has cushion of shorts. The FI long is now down to 59%, which is good news. And the other good news for me is that the market leading stocks have corrected first. Reliance, State Bank of India, these stocks have corrected and have led the market lower, which is a good sign because these stocks will bounce back. At least Reliance will and a couple of others will. So I think the market is in a good shape and the template should repeat that if you buy on dips, you make money.
Okay, absolutely. Well, as far as the Asia screen is concerned, it's very, very flattish. Some of our regional neighborhood markets have got a mild red tick on it, for instance, the Hong Kong markets and a couple of the other names out there. But largely speaking, the SGX Nifty is holding its own. The other thing perhaps that will be really important to keep in mind is the currency today. Remember, the rupee did close above 65 for what it's worth. That is a psychological level. And we've seen some strength overnight on the dollar once again, with the dollar index back to about that 95 level. So some more cues as we get into trade. But Lata, let's talk about, the seminal sort of moment it was in which demonetization was ushered in. Now, if the market is anyone to give a verdict, 21% in a year when we saw demonetization and GST, I mean, that's the market's call. But you read the economy very closely. What is it like on the ground?
No, that's exactly. The fact that the markets... Well, the market moved also because we are in the mother of all bull runs, even in global markets.
Yes.
And therefore, this had to happen. This is also accompanied by the general financialization of savings, which was a trend which had started at least 2 years prior to. After all, 2016 calendar was a great year, even up until November 8th in terms of the financialization of savings and the amount of money the mutual funds got. So that trend got exaggerated and improved upon, exacerbated after the demonetization. So these were ongoing trends, and we would have taken advantage, and probably we would have been up 21% even without demonetization, because this is part of
liquidity.
Yeah, both global as well as a domestic trend. The demon impact was actually seen, in my view, it was shallower than I thought. I expected that, human behavior will change, that people who are used to the jugaad of tax evasion will actually start buying gold, will perhaps buy dollars, because you just don't want to pay taxes. So, I have not seen that kind of behavioral changes. All that we saw in terms of impact was the 3-quarter dip in GDP. The demon quarter itself, it was about 6.5, and then 5.5, 5.6 and 5.7. But my sense is these numbers will get revised. The informal sector is not measured in the first because you only get formal numbers. It takes 2 years for the economy to throw the SME data. The CSO takes a long time to get that data. And it's possible that this, what we now call 5.6 or 5.7%, could get revised lower to closer to 5%. So that's the 2 percentage point sacrifice of growth that we've done. But it clearly looks like rural demand has come back. Urban demand still seems to be dithering a bit. Maybe therefore the price of demon was only that 2 percentage point of fall that we saw in 3 quarters. It's something that the economy's resilience surprised me completely. I didn't expect that so many sectors will come back with this kind of speed. But, there it is. In terms of the numbers, the way Titan and other companies have reported, it clearly shows that there has been a transfer of at least some of the purchases and production to the white data. For me, ultimately, what will demonetization be remembered? India will be a laboratory for behavioral economics. I mean, it is a gift. If you are a student of behavioral economics or a professor of behavioral economics, a researcher in behavioral economics, you won't get a better laboratory than this. I mean, every bit of data, and I think for the next maybe 50 years, you're going to see PhDs written all over the world with people coming back to look and pore at this data.
Oh, absolutely.
Demon will be remembered only by that, by the research papers. Nothing else will be remembered about demonetization.
Well, let's see if we can, along with the behavioral studies, we can actually get some hard numbers on better tax to GDP and some of the other ratios that you spoke of.
But it will always be difficult to detect because the government came with such excellent measures after that, which genuinely will, move activity from black to white. Like attaching an Aadhaar card to every bank account, attaching the PAN card to your bank account. So, the ability to use the white system for, withdrawing cash and propagating a cash economy has reduced for other reasons.
Absolutely.
So, we are never going to know whether the higher taxes is because of GST, because of Aadhaar. This is a salutary impact.
Generally, it's an economy moving more from the blacks and the greys to the white. to the white. And that's something that actually Mr. Uday Kotak notes in his latest piece. I was reading it. Even he's looked at Titan's numbers this time around, and he says that's such a case in point as to how the economy is turning with these measures.
And you know what? I remember, talking about this. Look, I agree that, this has been a global bull market, but, India as a country is resilient. I mean, and you will see that it will find its way. People will find a way. And even now, I mean, if you ask people on the street, I think 70 to 80% people would agree that while they face some problems during the demonetization problem, and especially a month after that, they still believe that the intent of that was right, and they in that sense the vote of confidence is still there.
Actually, of that there is no doubt.
Yeah.
The intent was absolutely above reproach.
Yes.
It is the method of execution that economists will
fallout.
Yes.
Yeah, can the same method, can the same intent towards black money have been done by attacking, for instance, real estate? Now, my simple point was, for the last 15 years, we know in Bombay how many people are buying, which are the flats going 60-40 black. So, those are the capitals of black money, the citadels of black money.
And to hit those dens,
would have made more sense. Do we have to attack 85% of the economy?
But
would we have
to argue,
attacked
even
8%?
wasn't that also at least partially done with RERA and with the Benami
No, that's what
amendment?
I'm saying. Those were the very, if the government has taken, I think, 15 excellent steps, my point is this one was not a well-targeted step. The other steps were extremely well-targeted, beautifully implemented. For instance, Jan Dhan, first getting Jan Dhan in, and then ensuring that all the subsidies go through Jan Dhan. How much of leakage of subsidies we stopped by such a simple and elegant implementation of Jan Dhan? So, and you can go on and on with the way in which these, loopholes have been plugged. In my opinion, that is what has brought the white economy a better chance than the black economy.
Just hope to get back to that 9% magic number, and this time more white than black overall in the Indian economy. Okay, let's quickly move on and talk about a couple of calls that we are getting, some experts and what they have to say as we get into trade today. Mahesh Nadurkar of CLSA says the second quarter results season has so far seen more results above estimates, but downgrades are still slightly edging out the upgrades. He says the GST transition slowed the first few weeks of the quarter, but most corporates noticed a pickup towards September, possibly due to the early festive season, as highlighted by high-frequency indicators as well. The duration of the pickup is key. Mahesh adds, though early October data shows some slackening again. He says the most interesting trend has been the high number of earnings revisions, with 10 up and 12 down seen from the 64 reporting so far. He still sees 14% FY18 earnings growth, followed by 20% plus in FY19 as a low base of demonetization and GST sets in from the December 2017 quarter, and of course is going to extend for the next 3 quarters.
Okay, 14% earnings growth is music if we can manage that. Okay, let's come to bond markets. Very important day yesterday for bond markets. 6.93 was scaled. So here's a view on the rupee first. Pramit Brahmavat of Veracity says a stronger USD and negative cues from the domestic equity market will put pressure on the rupee. He says the trading range for the spot USD INR could be 64.80, 65.20. And on bond markets, Dhaval Dalal of Edelweiss says the sentiment in the bond market continues to be remaining subdued amid rising crude oil prices, continued supply and lack of positive triggers on the horizon. He says this has pushed the yields to the upper band of the trading range. Says although levels are attractive from a historical perspective, traders are unwilling to take positions and prefer to wait for an opportunity to trigger value buying. He remains constructive on bond markets, expects 10-year bond yield to trend lower towards 6.75. No, this is not shared by anyone in the market. People are waiting for 7%. I was just waiting for that last sentence of Dhaval Dalal to check his level. 6.93 today. People in the street told me yesterday towards 7 we will buy.
Okay.
No, I mean, it may not go there. I'm sure they'll buy at 6.95. But it's an extremely bearish bond market. At the moment, 6.75 is a very distant dream. No one is even talking about that number.
Oh, yes, and it's been a sharp move from about 6.5 to 7.
It's a few things. Crude, of course, was the nearest one. But there is a big fear that fiscal deficit is going to cross 3.2. I don't know. I mean, this government has delivered on fiscal discipline, and the divestment figures are excellent. But still, the market is so sure that that more borrowing will come. At the moment, 6.75 to me looks tough.
Okay. 6.93 now on the bond yield. But let's move on and let's go across to Nigel for the world view.
Well, overnight, there was some strength on the US dollar. In fact, crude prices as well did come off from the top. But in terms of the US markets, they ended more or less flattish. The Dow at least ended in the green. And that really was aided by a deal that could be in the works. Remember, CNBC had reported that Disney as well as 21st Century Fox could be looking at a deal. And that's why, in fact, Disney was one of the outperformers in trade yesterday. We are talking about our own move in the last 1 year. Well, in fact, the US markets, as per a CNBC report, they indicated that those markets as well have gained roughly around 20%. In terms of earnings, the third quarter has been quite good because yesterday there was data that was put out that in fact said that the US EPS growth has been nearly around 6.5% on a year-on-year basis. So that's pretty good news as well. However, President Donald Trump is saying, please restrict these North Koreans from using nuclear weapons. And that was something that, ruffled the street a tad bit. If you take a look at the European markets, they ended mostly in the red in trade yesterday. And that's the frontliners. Take a look at the ATHEX. That ended with a cut of close to around 1.5%. From the emerging market basket as well, the Brazilian index was the big underperformer. On the flip side, we had the Russian index that was running away in trade. Asian markets more or less subdued this morning, more or less flattish. The Kospi is the outperformer, sitting with a gain of around 0.3%. The last time I checked, the SGX Nifty was indicating a flattish start. Back to you all.
Okay, Nigel, thanks a lot for that. Well, 1 year of demonetization and the BSE market cap has increased by 33 lakh crores. To be fair, the world market cap has gone up multifold in this period. So it's been a global rally, but Indian market too has seen a fair share of gains. Arvind Sanger now joins in from Geosphere Capital Management. Arvind, good morning. Thanks a lot for joining us. Well, we'll talk about the demon impact as well. But I first wanted your thoughts on the near-term move. We saw big underperformance yesterday for Indian market because of what's been happening with crude and macro issues. Do you think it's time to get a bit worried about the market near term, or do you think the market will climb on this wall of worry as well?
Well, I think the crude rally has some fundamental risks. If crude were rallying purely because global growth is strong and demand is strong, then India has seen that before in past cycles, and that doesn't matter as much. But the last move in crude prices is also being driven somewhat by tensions, emerging out of the Middle East with some of the moves in Saudi Arabia and some of the tensions in some of the neighboring countries. And then I don't know if you've been tracking, but the CDSs on Venezuela have tripled in the last 4 days because it looks like they are about to default on their debt if they've not already officially defaulted, and therefore there is a risk that their production could be further severely impacted from what has already been a falling production. So I think that when supply-led constraints drive oil prices higher, that is never good news for an oil-importing an economy like India. So I think, you were talking earlier about the fact that bond yields have drive oil prices higher. That is never good news for an oil-importing an economy like India. So I think, you were talking earlier about the fact that bond yields are hovering almost at 7% Indian bond yields. So you've got a couple of indicators which suggest that conditions are tightening a little bit for the economy, and obviously it is somewhat negative for the government's budget deficit. So I think that these are real concerns. The earnings this season is still another quarter of not anything to write home about. Individual companies notwithstanding, we're still waiting for that big turn in earnings. So I think these are the kind of times when you can see some profit taking. It's not by any stretch suggesting that the cycle is over, but it certainly could have some legs this correction.
Oh, okay. Good morning. Good evening, Arvind. Thank you very much for staying up for us. If you can dwell a little more on the earnings, we thought, companies like Titan, which very clearly show our proxies of consumer demand, did very well. Did extraordinarily well. And their guidance as well was, we'll take a 25% growth, very easily. Is not that convincing you that things are turning around?
Well, I mean, I think auto demand numbers have been pretty robust. Titan numbers, you have to actually be a little bit more careful about, because a lot of what has gone on, whether it's demonetization or it's GST or it's other rules which have, on gold, which have helped an organized player like them versus unorganized player. So there might be many factors that are driving Titan's strength, which are not necessarily going to be reflected in all consumer stocks. But I think, yes, there are pockets of strength. And but the problem we've had is we've had pockets of strength all along in the last 3 or 4 quarters in different sectors. But a broad-based strength has yet to emerge across the economy. And we remain optimistic that once the GST effects settle down, certainly in FY19, and even in the December quarter, where you'll have somewhat easier comparisons because of GST, because of demonetization effects last year's December quarter, we should see some recovery. But a more sustained one, I think, is either March quarter or which will be calendar 18 start or fiscal 19. Those would be where we would see the big broad-based recovery. So, Titan is encouraging, but I'm not sure it's all encompassing.
Okay. Arvind, good evening. So, when I think of factors, the pull factors on the downside or the risk to this market, I mean, one can always think about, valuations. One can obviously talk about crude prices, which is a very real issue. But then earnings improving and, the fact that we will be into the base effect going forward, because Q3 is when demonetization kicked in. So are there more triggers to propel the market on the upside? Is there a bigger case for a continuation of the bull charge than for a more meaningful correction?
Well, I mean, I think, again, I would separate the short term from the medium term. So I would say in short term, part of the challenge is going to be if the trade-off now that the government could face if oil keeps climbing is, does inflation start to rekindle a little bit? Does the government further ease off on some of the excise increases that were done when oil prices were falling? What does that do to the deficit? How does the government handle that? Those are some of the challenges. And again, inflation means that does the RBI easing cycle now turn into a tightening cycle? So, those are some of the slightly short-term negatives. Now, the reality is that in an earnings recovery, in a accelerating earnings growth, you expect RBI cycle to be an interest rate raising cycle, not an easing cycle. So I want to make sure that we keep this in perspective, that a recovering earnings and a GDP growth cycle will be accompanied in a normal cycle with RBI tightening. So I don't think it's bad by itself. It's just adjusting our framework from talking about RBI easing to RBI tightening. There's always some modest, I think, corrections as people get their mindset around it. But I don't think it changes the
Pretty much like the US. I mean, what exactly is happening in the US market right now?
Oh, yes. Arvind, the other issue that I wanted to discuss with you is something changing for Indian IT. We have started to see rally, and it's backed by some decent delivery numbers in stocks like Infosys. TCS is almost back to its 52-week highs. We have seen a couple of mid-cap IT stocks actually at 52-week highs. Is it fundamentally turning around? Is it a good time to buy into IT? And valuations are also supportive for some of them.
Well, I think clearly in a market where valuations in other sectors are well above historical norms, IT has valuation support. But I think you make a great point. We've written a lot of, or we've had a lot of concerns about IT sector, both from a technology challenge standpoint and from an H-1B and a general, unsupported visa environment in the U.S. But I think some of those news are more than adequately reflected. And this is still a sector where companies are able to grow at a decent pace. And therefore, I think, yes, there is room for IT to participate in this rally. And especially the companies, some of the smaller cap that you mentioned, mid-cap companies that are better positioned to withstand some of the, more technology challenges that some of the big players are facing. I think that's a great area to look at some of those companies.
Okay. Arvind, I don't know if we spoke to you about the bank recap, but quite separately, you just noticed the yields moving towards 7. Is your order changing within the finance space? Are NBFCs slipping a bit in your pecking order? And would corporate-facing banks like ICICI, Axis, and even maybe SBI moving up in your hierarchy?
Absolutely, no doubt about it. That you clearly had a period when the NBFCs had a complete tailwind in terms of the competition being very subdued or weak from the PSU banks, and therefore significant growth opportunities that they saw in the last several quarters. As you see both, the interest rates rising, and you see the PSU banks, because of the bank recapitalization, coming back into the fray in terms of being able to provide loans. Some of the areas like housing loans and others are likely to see somewhat greater competition, whether it's LAP or it's housing loans or what have you. And that will create some headwind for some of the NBFCs. So NBFCs have been one of our favorite areas, and that's clearly somewhat less attractive. And you hit the nail on the head that some of the, if the PSU bank recapitalization helps accelerate some of the resolution of some of the bad loans and some of the NPAs, then that means some of the better positioned PSU banks like an SBI or BOB, or some of the private sector banks that have lagged badly, whether it be an Axis or an ICICI. Within that group, I think it makes a lot of sense to look at some of those names and see where the opportunity may lie.
Okay. One final brief question for you. Today is a day when we are collecting important sound bites on demonetization. Finally, what did that event mean for you?
Well, I mean, I think it was an interesting experiment, but there's in economics, like in anything else in life, imitation is the sincerest form of flattery. Okay. I don't see too many countries in the world looking to emulate demonetization. All
right. We'll leave it at that. Thank you very much, Arvind, for joining us with your thoughts this morning. So that's interesting. IT as a pack, and yes, valuation still a challenge. Arvind is not convinced that Titan represents a case of higher growth. It's not all-encompassing. It's good for Titan.
Yeah, look at Wipro's one-year chart. I mean, that's the point I trying to make. Actually, IT is going through a bull market. We sometimes don't realize it. Wipro is up 34%.
Don't you think you have to give credit again to Credit Suisse? When they called metal 2 years ago, and when I last met Neelkant and he was on our show, I said, which is the next metal? And he said IT. He was wrong for about 5-6 months, but it's really coming back.
It's only because, because Infosys has so much weight on the index, and we had that Vishal Sikka incident. Because of that, the Infosys stock got derated. That the IT index may not be showing this kind of move, but large cap IT like Wipro, Tech, a couple of other stocks, they have seen a big move over the last 1 year.
But at the moment, let's discuss crude, because that's taken away so much of market cap yesterday from Indian stocks. Brent crude touching $64, even $65, is a matter of concern for an oil importing country. Daniel Hines, the senior commodity strategist at ANZ Research, is joining us from Sydney. Good morning, Daniel. Thank you very much, and thank you for your patience as well, for waiting for us. What's the sense? It's a very crucial commodity for India. Do you think there is a new normal in terms of the range? Will it be, straddling 65 for the remaining part of 2017?
Yeah, look, I think the rally over the past month or two has certainly been quite strong, and obviously that opens up for some selling after, I suppose investors look to take some profits. But I do think the price has taken a structural step up. We've seen or had a relatively quiet period for supply disruptions in 2017. I think the geopolitical risks have risen quite significantly over the past month or so, and that's certainly now being baked into the price. And this comes amid a broadly positive macro backdrop, and demand has been pretty good, and we're certainly expecting to see that continue over the next 6 to 12 months. So yeah, I do think prices have certainly taken a step up from that $50 a barrel mark that they were sitting for so many months. But whether they can push high from here, I suppose, that's a tough question to ask. I think ultimately, we do risk some price weakness, if it does incentivise, US oil shale producers in particular.
Hi, Daniel. So the question is that a lot of the headlines that we've got and the events that have happened in the Middle East in the last 1 week or so, Saudi Arabia and this so-called corruption crackdown, the kind of headlines we're getting from Lebanon, are they largely a passing event? And have they already had the impact they could on prices, pretty much at around 65? Or could there be a longer-term impact here?
No, I think there's some longer-term issues wrapped in these anti-corruption probes in Saudi Arabia. Certainly, that country has certainly looked to aggressively, diversify its economy, and it has certainly staked its claim on keeping the oil market relatively tight and prices high to mitigate that diversification. And I think the issues now in Saudi Arabia probably do put a bit more of a higher probability now on Saudi Arabia tightening the market even more than it needs to assure itself of those high prices. So we think the probability of an extension of the production cut agreement is quite high, and even would raise the probability of that being extended even more than the market expects. So I think that is certainly something to play out, I suppose, over the next 3 to 6 months.
All right, we'll leave it at that. David Hines, thank you very much for joining us with your observations. So both the Saudi factor as well as global growth likely perhaps to keep crude not in the 50s but perhaps in the